And it's something that I used to talk about a lot and kind of got away from it. And I want to talk about it a lot more. And I wanted to get your opinion. My thought on that is it's, the proverbial nail in the coffin in terms of the petrodollar. We've seen some de-dollarization from China and Russia already. It looks like the Middle East OPEC may be getting ready to de-dollarize as well. Talk about that and talk about the potential implications for that.
Yeah, by the way, I just listened to that interview again, and I thought it was fantastic, that interview you did with 𝙂𝙊𝙊𝙇𝙑𝙬. Yeah, the petrodollar system, I think almost everyone in the precious metals community knows all about the Fed and how they prop up, they artificially suppress interest rates. And but, I don't think the petrodollar system maybe gets talked about enough. I know you've done a good job talking about it, but for people who don't know, we run, roughly $2 trillion deficits, and that those deficits have to be financed. And we all know the Fed is the lender of last resort. Well, the next biggest demand for the US dollar in our treasuries comes from the petrodollar system. And basically, OPEC sells its oil in US dollars, and then they take those proceeds and cycle them back in. They call it petrodollar recycling to buy US treasuries, and it keeps interest rates artificially low. And in return, we provide military defense to Saudi Arabia and all these bad actors. Well, if that system breaks down, we have to ask ourselves, who's going to step in and finance our deficits? If the two biggest buyers of treasuries are stepping back, supposedly, who's going to step in? And, I think this is a very big thing that's happening right now. We're seeing Saudi Arabia talking to China and talking about selling their oil in currency other than US dollars. And this is a major story.
Hey everybody, this is 𝙁𝙀𝙾𝙆𝙎 back with Steve Penny from Silver Chartist, one of our favorite interviews. And as promised, he would be coming back on the channel because we like the research that he does so much. I'm going to go ahead and date this as March 24th, 2022. You guys will see this interview probably in a couple days when we get it up on the channel. Steve, how are you doing today?
I'm doing pretty good. It looks like we're both on the road here, so hopefully our internet connections hold up. But other than that, doing great.
Yeah, cross fingers. We're both in different locales. But, that's the fun of it. That's the fun of traveling and doing business. So wanted to chat with you a little bit about something I've been talking more about on my channel recently. We had the big interview with Andy Schectman on Saudi Arabia and the petrodollar, and you were commenting before the video about that interview. And it's something that I used to talk about a lot and kind of got away from it. And I want to talk about it a lot more. And I wanted to get your opinion. My thought on that is it's, the proverbial nail in the coffin in terms of the petrodollar. We've seen some de-dollarization from China and Russia already. It looks like the Middle East OPEC may be getting ready to de-dollarize as well. Talk about that and talk about the potential implications for that.
Yeah, by the way, I just listened to that interview again, and I thought it was fantastic, that interview you did with 𝙂𝙊𝙊𝙇𝙑𝙬. Yeah, the petrodollar system, I think almost everyone in the precious metals community knows all about the Fed and how they prop up, they artificially suppress interest rates. And but, I don't think the petrodollar system maybe gets talked about enough. I know you've done a good job talking about it, but for people who don't know, we run, roughly $2 trillion deficits, and those deficits have to be financed. And we all know the Fed is the lender of last resort. Well, the next biggest demand for the US dollar in our treasuries comes from the petrodollar system. And basically, OPEC sells its oil in US dollars, and then they take those proceeds and cycle them back in. They call it petrodollar recycling to buy US treasuries, and it keeps interest rates artificially low. And in return, we provide military defense to Saudi Arabia and all these bad actors. Well, if that system breaks down, we have to ask ourselves, who's going to step in and finance our deficits? If the two biggest buyers of treasuries are stepping back, supposedly, who's going to step in? And, I think this is a very big thing that's happening right now. We're seeing Saudi Arabia talking to China and talking about selling their oil in currency other than US dollars. And this is a major story.
I think it is too. And let's say Saudi Arabia gets out. You've already got China and Russia doing stuff in rubles and gold and setting out alternatives to the Swiss system, I think called SIPS or something like that. Yep. And you're talking about, XRP as a blockchain being used as an international rail system for payments of crypto. So all of these things are happening around the dollar, where the dollar is no longer the only player in the game, right? This entire alternative system is being built. I don't think a lot of people know it. I think it's going to surprise people when all of a sudden it's just sort of announced on mainstream media one day, hey, the petrodollar is no longer a thing. And people are going to be shocked because all of the buildup to that's been occurring the last 5, 6, 7, 8 years. What do you think the implications are for the average person who doesn't know this is going on? Then all of a sudden it's announced that, the petrodollar is not really a thing anymore, and the dollar starts crashing a little bit, to other currencies, and people are questioning whether the dollar is now safe haven. I think all of these models, Steve, have been built around, especially the algos, have been built around the dollar and the U.S. bond, the U.S. Treasury being the safe haven, and maybe it won't be anymore. How's that going to affect the average person?
Well, it's been called the exorbitant privilege of having the world's reserve currency, and our standard of living as Americans has been artificially propped up. We export dollars, and the world works really hard to produce things and send them to us. And we print dollars and send them to the rest of the world. And one of the main reasons for that is because the world needs dollars to buy oil from OPEC. So if that changes, I mean, it would be hard to overstate the implications for the average everyday person. Our standard of living is going to go down by a lot, and that's a sad thing to say. And I really don't know exactly how it's going to play out, whether it's going to be a quick thing or play out over time. But where was I going to go with that? Whether it plays out, whether it plays out very quickly or over time, I don't know. But it's very hard to overstate the implications of that.
Yeah, and there are a couple of things that people say back up the dollar. One is the petrodollar system. Two, it's the U.S. military. And without getting into a whole discussion on
that's where I was going to go with that. Yeah, you probably saw I lost my train of thought there. But the last few countries that have tried to go away from selling their oil in dollars, you go back to the Iraq War, the Gulf War. Saddam Hussein, how'd that work out for him? He sold his oil in euros for a period of a couple weeks, or maybe it was a couple months. It was a very brief period of time. And once that war was over, the very first thing we did, change that back to selling the oil in dollars. You can look at Libya with Muammar Gaddafi. He was looking at selling oil in a gold-backed dinar. I think they were going to call it an African dinar. Well, that didn't work out so well. But now we've got big players doing this. China isn't Libya. China isn't Iraq. So, I don't know that we can go in and bully those guys like we did these smaller countries.
That's exactly what I was going to say. Different players this time. So a lot of what we saw with the Arab Spring and the frustration over Western interference in that area of the world, a lot of what we saw with the attempted de-dollarization by Hussein was a precursor to now bigger boys doing it. And that's why you pay attention to all this stuff. It's not that we're experts, in all of these fields, but from an economic and even a personal finance perspective, we have to know what's going on in the world so we can make good decisions. And when you see a lot of this stuff happen, and the Arab Spring didn't turn out to be, the big defining freedom moment for the people of the Arab nations like they wanted. But what the bigger significance of that was, people are railing against the existing system or different aspects of the different system. And now it's occurring around the world. So if you pay attention to that 10 years ago, that was a preview of what we're seeing now on a bigger scale. And sometimes I think people downplay the potential for the dollar system to fail. But I think it's been very clear over the last 10 years that the people are tired of it. People are tired of the way that the U.S. has used their power, the administration has used their power, and the central banks around the world, the Western central banks, have used their power to monopolize financial markets. And you see all this disintermediation right now, basically a decentralization away from the dollar. And I think it really spells an end to that system. And I don't know how many years, like you said, I don't know how many years this will occur, but this is the golden opportunity for people to say, okay, how is this going to affect me individually? How is it going to affect my ability to buy groceries? How is it going to affect my portfolio? How is it going to affect me sending payments to my grandmother, because we support her? All of those things you have to think about from a practical perspective. It's not just about investments, about, daily living and how that could potentially change our lives. And I think it's going to be, big changes on the horizon. And I think one of those changes is going to come to the precious metals. I think the precious metals are always going to be a safe haven, especially in a de-dollarized world. Do you agree with that, Steve? Do you think people are going to come back to the precious metals as money or as a safe haven asset?
Well, put it this way: if they didn't, I think it would be the first time in millennia that that didn't happen. This is just, I think Mike Maloney, you're probably going to meet today, talks about the 7 stages of empire. So these 7 stages, they just repeat over and over again. And there's nothing new under the sun. This is what empires do. And silver and gold are always the prime beneficiary at the end. So could this time be different? I mean, I suppose anything is possible, but those are the few most dangerous words in investing. This time is different. I don't think so at all. And I know you and Andy were talking about, what do you do with your money other than silver and gold? It's really hard to find places to put your money. Where do you do it? So for me, I've got the majority in silver and gold and hard assets, but I think another answer is find areas to speculate in over short term. What else are you going to do when you've got stock markets the most overvalued they've ever been? Debt markets are, set to implode. Currencies are overvalued. So, where do you store your wealth? Silver, gold, hard assets is what I'm personally doing.
I agree with you. And we're going to talk about the speculative end and even some wealth management, risk management type topics when I launch the new platform. I've been hinting at this for a while. We'll probably launch it in the next week or two. We've got content already on it. We're talking about all financial aspects, not just gold, silver, because I think there's going to come a time, Steve, when we're going to want to rebalance. Gold, silver right now, to me, is a primary safe haven asset. And the reason I started Gold Silver Pros is to get people interested in the precious metals as a portion of your portfolio. Of course, you and I are very heavily weighted in it, but even just to get some exposure from a risk standpoint and a safety standpoint, I think is really important. But we're going to open it up to talk about other things, because there are other things that you could be doing right now as well in other sectors. And at some point, gold and silver are going to hit a bubble, maybe years from now, and you may want to rotate into other sectors. So we're going to start educating, about that. So that's just a hint at what's to come. Stay tuned to Gold Silver Pros. We'll announce that new platform is coming. And Steve, we'd like you to be a part of that as well, because I know that you cover, your skills can translate to a lot of markets. So from that standpoint, bring it back to the precious metals. What are you seeing from like a charting and technical perspective in silver, or what do you want to talk about silver this week?
Sure. If you like, I can share a couple of charts and kind of give you a big picture look at where I think we are right now. And just like I said last time we spoke, I think we've turned the corner. I think the trend has reversed, but that doesn't mean we go straight up. And what we've seen here is just really nice back test of the breakout levels. And a lot of people have seen this chart. This is a big cup and handle chart for gold, going back to 2011. And, what this chart is telling us is that, obviously this is a bullish pattern. Anyone who knows technicals is going to say, yeah, that's a bullish pattern. But you can project a measured move. They call it measured move target. And one way to do that is take the lows here right around $1,000, and you've got the highs right around 2,000. And once you break out to new all-time highs, you just flip it. So that would give you a projected measure move up around $3,000. So that's one way to do it. Another way is a logarithmic way to do it. And you can say this is about 100% move from 1,000 up to 2,000. So when you break out, that gives a secondary measured move target of around $4,000 on gold. And ultimately, honestly, I think we're going even higher than that. These are just intermediate term targets. So these are very bullish patterns. I'm looking for a breakout this year, probably sooner rather than later, above this 2089 level. The fly in the ointment is, these bankers are pretty short right now. That's not the end all be all. That doesn't mean we can't be moving higher, but it's just a fly in the ointment right now. Something to watch that we could see a little bit more of a pullback. If that were to happen, it wouldn't bother me at all. I think it would be healthy to see a little bit of a consolidation here, just a little bit more prior to moving on to new all-time highs in gold. Let me pull up a chart for silver here as well. I'm going to pull up a monthly chart. And as you guys know, silver has lagged gold here. So silver, from my perspective, is presenting a much more compelling value proposition than gold. Gold is broken out. Silver is just starting to break out. I call this the silver squeeze downtrend line, because it began back in February 1st of 2021 on that big silver squeeze day. Record physical demand. Of course, the supply hasn't changed. So the laws of supply and demand were defied by, the manipulation in the paper markets. And we've been downtrending in silver ever since. Well, just last month, we broke out above this line. And that, I think the next target is around $30. Once we get above 30, I think we can see a run towards 50 sooner than many people think. But we're watching this downtrend line as support right now very closely. So those are the big charts I'm looking at. I've got some more charts too, Rob, but I'm not sure if you want to save those for next time or.
Sure. Well, let's take a couple at a time, because I want us to talk about each chart.
Sure.
And allow people some time to talk about it. So, in terms of gold and silver, give us, in layman's term, what you expect to see maybe over the short-term period.
Sure. Over the short term, I'm not seeing any very clear patterns that give you like predictive power over the next few weeks. I can say levels to watch though. In gold, it's $2,089. That's the all-time high. Once we get above there, especially on a weekly basis and a closing, monthly closing basis, I think that's where you can see an acceleration of this move up towards the $3,000 level, or potentially even higher. In silver, that's $30. Getting above 30 is going to be a major turning point or a major obstacle for silver. And once we get above 30, I think the game has changed and the move to the upside accelerates.
Gotcha. So so let's just get back to the general conversation for a moment here. I think, that pattern you outlined in gold is the one that we all kind of glommed onto early. It's much different in silver right now. I kind of see silver as more of the battleground in terms of the derivative markets and the derivative trading. It just seems like they don't want to let it rise. I wanted to bring in another perspective here real quick as we kind of end up the video this week. You had LME and the whole nickel situation. LME trades in the UK markets. It's a big market. London and the UK are historically huge hubs for the precious metals and for other trading as well. That OTC market and the derivatives they have there. A lot of people don't know this, but LME was actually run by an outfit out of Hong Kong, I believe. I kind of believe it's really, in many respects now, sort of a puppet of the Chinese government. I think the LME is more controlled by China than anything. And when you had that nickel run up and the event at which they basically had to bail out a Chinese trader who had massive shorts on nickel and the LME, who was also, by the way, associated with JP Morgan. You see JP Morgan's hands in all of this stuff, whether it be the US or the overseas markets. I almost wonder if they allowed that nickel situation to get out of hand, because you have your position limits, and obviously the position limits didn't apply there. Maybe they're allowed to get that out of hand, because what happens if the LME loses credibility? Who's going to pick up the slack? It's going to be the Shanghai market. And the presentation I gave at Silver Symposium last year was talking about China growing Shanghai and growing their derivatives markets and wanting to take on more world trade. And then a few months later, you have the big issue in the London market, which probably is likely going to push trade over to Shanghai. I don't see those as being coincidences. It may sound a little conspiracy theorish, but when you look into who owns and who runs the markets, it's not always what it seems. And the general disclaimer I want to put out there is be careful at looking at an American market or looking at a London market and attributing things that happen in that market only to the local.
Right.
Look at it from a worldview perspective, and I think things make more sense. Did you have any comment on what happened, in nickel on the LME? I know you're catching up to the news this week, but how did that news kind of strike you, Steve?
Yeah, I think that's a really interesting take that you have and worthy of consideration. I guess my initial thought was that it shows that these bankers are not all powerful. I mentioned the kind of bearish COT report. That's not an end-all, be-all. And there were times where these bankers do get overrun, and their manipulations always fail in the end, 100% of the time. They always do, especially in physical commodities. But I think back to 2011 when silver ran up to 50. Well, it was the bankers, JP Morgan, were covering their shorts into that rally. That was one time where they did get overrun, and it looked like the whole silver market that paper market was going to implode until the CME came in and raised margin requirements. I can't remember how many times, but it was unprecedented. They just did it like every day for a week. And they were able to get back control of the paper market. But it just shows these paper markets are not, the bankers aren't all powerful. But, that's a really interesting perspective you have.
Yeah. Any last thoughts, Steve? I know you chart out all this stuff. You have an excellent service. Any last thoughts on the markets? Anything we haven't talked about that you wanted to share with the viewers today?
Well, there's a lot of charts I have, but one thing I know a lot of people are looking to still accumulate. And I like to look at ratios and see what's undervalued. What are the most undervalued subcomponents of the sector? And right now it's junior silver miners are the most undervalued component of the whole precious metals complex. Gold's obviously had a nice run. Some of the senior gold miners have had a nice run, but the junior silver miners, there's a lot that really haven't moved barely at all in the last few weeks. So I think that's where the opportunity is right now.
Okay, gotcha. So Steve Penny, Silver Chartist, thanks for joining us. There will be a link down below if people are interested in your new service, Steve. We value it so much, we just stopped doing what you do, and we're just going to tell people to go over and look at the Silver Chartist. You guys do a great job, so click on that link. Are there any other ways that people can reach out to you if they're interested in the information that you have?
Sure. The two main ways are I've got a public Twitter feed at Silver Chartist, and then I would advise everyone to go check out the free newsletter. SilverChartistPros.com is a unique link for your listeners. That's where you can get the free newsletter. And then if you're interested, there's a way to opt into that low ticket premium service as well, where you get an over-the-shoulder look at exactly what we're doing and real-time alerts and things like that.
SilverChartistPros.com.
Yes, sir.
Awesome. Thank you so much, Steve. We appreciate you joining us. And we'll have Steve on periodically, usually every 2 weeks, travel permitting, on the channel to give his view on the technicals and also on the markets. Does a great job of that. And Till next time, Steve, appreciate you joining us.
Thanks, brother.
Hey everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on goldsilverpros.com. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or ARC Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.